The AI trade is dead. That's right, the tech names, the high flyers, all dead. But as we know, there's always a bull market somewhere, you just need to know where to look. And in this case, you've needed to look to the banks, healthcare, and the metals. Suddenly, the old man Dow doesn't really look so bad. In all reality, I don't think that the AI trade is dead and gone forever, but it has been difficult there over the last few weeks, especially on the long side, really ever since Palantir earnings. This probably means keeping an open mind to a slightly more resilient S&P 500 and a much weaker NASDAQ. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 6 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale to assess exactly what's going on here from a trend perspective. Now, we all know that the close of last Friday's bar was a major threat to the daily trend. We had the previous bearish engulfer high, which we had broken down underneath and closed underneath as of Friday's session. Now, on Monday, via the gap up, we reclaimed that exact level. We recovered over it, and you can see in the lower wick of that daily bar, we actually used the bearish engulfer high and the daily 20 SMA as a new point of support. So that's an incredibly bullish flip happening here on the market, and what it ultimately does is it prevents the opportunity for a stronger daily trend reversal in the downward direction. If we did not get this gap up on the Monday session and we opened underneath that 674, 675 zone, let's just say it was a small gap like this, then the opportunity for the sellers would have been to set a lower high here and then rotate the trend back in the downward direction for a daily trend change. We would have been talking about the potential for, of course, the head and shoulders, but that's just not what we're dealing with in front of us as of right now. Once again, this flip and the hold at the low of day on Monday is incredibly nuanced and bullish off of the previous bearish engulfer high. Now, the issue with this, though, is that intraday, it has not been a very clean trend in the upward direction. I'll show you that on the hourly chart in just a second, but one further data point that I just want to discuss here on the daily before we move is that we do have, even if you wanted to use a trend line, a break of that resistance trend line. You can also see in the lower wick of today's Wednesday bar, these previous 3-day balance range lows are acting as newfound support in that lower wick. Once again, if we had stronger sellers participating in this market, number one would have been the lower high underneath the bearish engulfer high, something that looked like this, and number two would have been a reversal for a lower high here to get to this level. Then ideally sellers would have done this. That would have been a stronger reversal underneath this 3-day balance range low, which is just simply not taking place, and we can see that evidence in the lower wick of today's daily bar from the Wednesday session. Now let's take it on down to that hourly chart, though, because what I want to talk about here is, although the trend is up, it's been very, very difficult to actually capture the long trade in the index, right? You could see here lows, higher lows, and higher lows on today's session. But what you'll notice is, and this is sort of a little bit of a pattern or a theme in the market recently, is that the opening drive has been down, and then mid-morning we've caught a bid. Opening drive is down, mid-morning we catch a bid. This morning on Tuesday, right, so the morning of Tuesday, we just balanced all morning. You would have had to remain incredibly patient until about 12:30, 1 o'clock, and then we got a little bit of lift into the afternoon. Same thing today. The market opened on a gap up. Instead of going gap fill reversal, it overshot. It went all the way to the key level. You would have had to remain incredibly patient for that 12 o'clock time frame, 12:30, 1 o'clock again, and then you just got a little grind in the upward direction here, not even really a strong momentum move into the afternoon. So although the market is technically in bullish structure here, it's been very difficult to actually capture and capitalize on the long intraday. So I want to maintain a bullish view of the market, but how does this market ultimately advance? It's going to require, in my view, let me zoom back in here a little bit, either some phase of consolidation in here that builds out a flag, and then we do this after some consolidation. Maybe the market becomes a little bit more initiative. It likely would require some kind of catalyst to act as the spark that allows new money buyers to have the desire to get involved up and over 685. Or if we do open on some sort of gap up, what's the theme of the market been? You probably want to remain patient, look for the washout, find the higher low, and then try to navigate the structure back in the upward direction. So very, very difficult to participate in that upside grind without having to remain sort of sidelined through the morning pullback and then execute on the opportunity when it starts to present itself, which has just been, incredibly testing intraday. Like, if you use your mental capital trying to capture those morning momentum trades the first 3 hours of the session, you're pretty much burnt out and done by the time the end, the sort of mid-morning pivot has been coming around, at least as of the last 4 trading days. So it doesn't have to be that way. We don't want to, over-index, so to speak, on recency bias, but that's just a little theme that is very apparent here over the last, like we said, 4 days. Now, if the market is going to pull back in a more deep sense, this is technically okay, and I honestly think that the washout long would set up a better trading opportunity if we could get back down to this level, with a cleaner break of the hourly trend to attempt to set some kind of daily firm higher low. Right, if we could get a daily higher low via flipping into an hourly downtrend, so reverse this, say highs, lower highs, if this is the last major higher low, bring in some kind of lower low back down towards the engulfer high for another retest, that would start to stage, in my view, the stronger daily higher low, which would hopefully fuel a decent upside move, trying to navigate back to the equal high, if not the all-time high. So the observation here simply is, if you're trading the S&P at the index level, it's required patience, it's required not getting beat up by the morning session, and really looking for those deeper pullback long opportunities, not necessarily chasing breakouts early in the session. Those are the key levels. I do think the market is bullish until proven otherwise, being over the bearish engulfer high, as well as being above the 3-day balance range low from back here, which clearly offered resistance in these 2 peaks as well. So if the market's doing this, no reason to be a big aggressive bear. Wait patiently for this over time with some sort of catalyst, or if we gap up, gap fill reversal, some kind of pullback off of that, then navigating to the highs, or change the hourly trend to down, look for the daily higher low here, better buying opportunity if we have some better resets across the heavier weight core list of companies, which we'll of course talk about as the show wears on. Let's take a look through our supporting categories here for the spiders themselves. Let's go, where am I going here? Intraday anchored view apps, there it is. So above the entirety of the stack, and honestly we should set one as well to the Monday open. Let's just do that together, because why not? This should take 2 seconds. Anchored view app, thanks for bearing with me here. Monday, of course, was the 10th, so we'll go 2025 11 10, and that looks pretty good. We'll make it dotted. That is going to be under here, and we'll turn the label off. Perfect. Let's say okay, and there is our Monday anchored view app. Notice how it's confluence right here around that 680.50, and then notice how this cluster is confluence near the daily 20 SMA. It'll start creeping slightly higher. Generally, I think the anchored view apps are helping us keep an open mind to remaining bullish until proven otherwise, and also reinforcing key support point number 1 and key support point number 2. Let's just save this study set so I don't have to rebuild it for our NASDAQ, and then we'll also come in here with the Fibonacci's, coming in from the top of the move to the bottom of the move. Notice that we're over the Fib 68.1. The more candle closes we get above that level, the higher the likelihood that we do go on to produce the 100% retracement. That makes sense to me here. The 50% retracement is right on the money with that 675 top of the gap, Monday low 20 SMA anchored view app cluster, reinforcing that that is the key spot. Bearish engulfer high 675 to 674. I'd give it about $1 worth of range there if that deeper pullback were to emerge based on an hourly trend reversal to look something along these lines right here. Let's clear that up. Let's take a peek over at our market internals. If you're not familiar with the internals dashboard, check out the video tutorial in the top right hand corner. What do we see here? The main thing to ask is, okay, market's been making an advance. Is it number 1 being supported? Is it number 2 massively divergent? Or is it just kind of neutral? Well, I would say it's really neutral to supportive, right? Volume inflows technically on the Monday session, Tuesday, today's Wednesday session, so that checks out. The market has been higher. The advanced decline line is over the 0 mark. That's also bullish. You can see here intraday, right? Today was no walk in the park. It was a majority of the session being spent under the 0 mark on the index score. So once again, it's not been an easy trade intraday. Look at how flat this was on Tuesday morning. That's the epitome of chop. Right, same thing here on Monday on that deep pullback off the open. If we look at the cumulative build, nice 45-degree line, decent build here, and then a slight downside build. So I wouldn't really call this divergent. I would say that we have volume flows to support the market. The market is generally moving in the upward direction with the support of the exchange behind it. It's just not been a very easy trade to pick off intraday. It's not like we have big momentum breakouts and volume flows are every single day up and over 300 million. We break a prior day high, Brigade bolt above, pull back higher low, let's rock and roll. Hasn't been that situation at all. It's bullish, but very, very just even keeled bullish. Pullbacks, give and take, ebb and flow from the market. Let's jump on over to the profile and see what this has for us. If you're not familiar with market profile, check out the video tutorial top right hand corner. The value area has also been moving higher, right? So here's the Monday value. Here is Tuesday, and here is today's Wednesday session. Believe it or not, that is ever so slightly in the upward direction. You could even just make the argument primarily overlapping with that Tuesday session, but regardless, it's not moving lower, right? That's the key takeaway here. The market is not balanced. It is technically trending in the ES. We do have the drag of the NASDAQ, so to speak, weighing on price action here. However, you can't really fight this trend until we take out a previous bar low, which we just haven't done. One thing I'll also add here is that if you take a look at the Tuesday session in particular on market profile, I've zoomed in here a bit, we have a poor high. That's number one, meaningful. But number two, it was just a double distribution. Right, so the double distribution was primarily accepted in the upper distribution today. I get it in the after hours. I can see that we're slightly lower here. I'm, not oblivious to that fact, but in terms of intraday volume commitments, you can see it's overlapping to sideways in the upper distribution, which is technically a little bit more bullish as opposed to bearish, right? We sort of closed the single prints here and saw a sharp reaction out of it from the ES. I think tomorrow is just a matter of, do we open back in the upper distribution? Survey says if so, great, neutral to bullish. If we open in the lower distribution, okay, maybe now we have something in play where we're underneath the previous bar low and that hourly trend is reversing. If we just go back on over to the Spider's Cash, right, something that looks like this, okay, now we can play ball up against this deeper pullback into 675 to reevaluate and say, okay, is that daily higher low going to emerge on the retest and the revisit, ultimately, of the bearish engulfer high? And then at that phase, I know, patterns just describe different types of trends, so this is not supposed to be rocket science, but here's a left, here's a head, here's possible right. In terms of a major inverted head and shoulders, it's much more well-defined in the NASDAQ, and we'll see this in just a second, but it's a possibility for a reversal pattern here in the S&P 500 more concretely based on this attempt at a daily higher low. So 675, you know my thoughts. It's bullish until proven otherwise, but very, very difficult to actually participate in thanks to the deterioration, basically, of the AI trade. There is some rotation going on. You can see that there's clearly rotation in the sectors. So I do think it's still bullish for the S&P generally speaking, but it is hard intraday to pick off that long. There's certainly been a very clear lack of upside momentum in terms of how these trades have fired off. Let's jump on back to the daily time scale here, give a little reset and take a look at the NASDAQ side of the house. And what do we see? So first thing I think is most obvious, you've not really made an advance this week. You just kind of have inside consolidation on Monday, Tuesday, Wednesday, obviously with the gap up on Monday, but from there you've really just gone sideways, unchanged on the market. I do like the fact that we are over the bearish engulfer high. It's certainly a step in the right direction for buyers. You could start to build the argument that here's your left, here's your head, here's your right shoulder. Neckline is this flat high up across the top, these previous lows from back over here. Certainly possible, but there's not much to really do or say about the NASDAQ, noting how flat and balanced it is inside this area here. We're sort of like riding that daily 20 SMA. Typically, the first test is the best test. So on the pullback on Monday, you would have wanted to test, go, and then not look back, sort of continue that move in the upward direction. The fact that we now have 3 equal-ish lows just means that this is going to be a flush point. And lo and behold, what's underneath us? This unfilled gap. So sellers didn't do their job. They didn't close that gap, which is carrying forward as a bullish data point as well. Notice here on the NASDAQ, you actually have this as a trend line, and then you had a secondary that was kind of like this, Monday, Tuesday highs connecting there. So you gapped over it this morning and you just closed right at it. So I wouldn't argue that the daily trend is still down on the NASDAQ. It didn't really flip to down anyways because you have lows and a higher low happening here. Yes, overshoot, but it's still a higher low relative to the pivot. And now it's just about, does the market sustain a higher low over that? I'd really go for probably the gap fill reversal. If I'm being honest, it would be an overshoot of the bearish engulfer high again, but something that looks like that on the NASDAQ daily chart, I would still qualify as a daily higher low here, preserving the trend is up. The next thing that could happen that would keep the trend up or confidently, give us that implication of an uptrend would just be the new high. Right? Can we make a new high over 627 to navigate to the gap close and try for price acceptance inside of this upper range? So that's the daily chart. A little bit of relative weakness, and you can even see this just on the Market Minder window over here. Take a look at the big 3 indices, right? You've got the Spider's Cash down about 21 basis points, NASDAQ 60 basis points, and small caps stuck in the middle with you, down about 49 basis points there. So S&P a bit more resilient, NASDAQ weaker, as mentioned in the intro, seems to be the case of what we're dealing with currently. Let's take a look at the hourly chart, see what we have from a trend perspective. So here's your Tesla logo, right? We were sort of talking about and joking around how the inverted head and shoulders looks like the Tesla logo. There you go. Once again, very neutral in this range here. I wouldn't make any bold assessments as to what we think should happen in that range. Let the market chop, let it do its thing. If we go look below and fail on 616, great. Potential long on the recapture back above. There might be a scalp long here over 622 to today's high. That would be a recapture of that Thursday high and Monday high pivot. Also the sort of highs as well of Tuesday for that matter. So 622, little scalp to here, but generally you're still just trading inside of a range rather than actually trending in the market. So the ES has trend, the S&P has trend, the NASDAQ certainly does not. I would think that the next major step in terms of structure, right, is if the market could do this, that would start to be a bit more compelling on the long side, recapturing and staying above with a Brigade Bolt up and over 627. So Brigade Bolt long there, probably just like the S&P 500, requires some type of catalyst, and it probably has to be linked to the AI trade. It probably has to be some sort of improvement with NVIDIA, has to be some sort of improvement with Palantir. AMD has had decent relative strength recently. I would look to Meta, right? Even Meta as a hyperscaler, and sort of Zuckerberg just relentlessly getting punished for all of his CapEx spend there. The stock is straight down. Some sort of easing of that, or an acknowledgement, something, right, has to happen as a catalyst if this is going to be a bit more of a compelling trade in the upward direction. Now, if this does not go look below and fail, and we actually do rotate through the gap a little bit more firmly, there's probably a short from point A to point B. That's not unreasonable. That's a funky looking B. But point A to B, not unreasonable, considering that we have, just the gap there. There's thin structure. There's nothing. You'd be underneath the daily 20 at that point. And the threat here just becomes if the market then cannot stage a rally, a more severe rally off of this to look like that over time, if instead the market looks like this and then whimpers out kind of in here, that would be a major red flag. And this is where I think it's important to parse out that weakness versus resiliency from the NASDAQ versus the S&P 500. I'd be much more open-minded to this as being a reasonable outcome in the spectrum of base cases that we might carry forward versus the S&P 500. So anybody who maybe just watches the first S&P analysis and then doesn't sort of tack on this NASDAQ nuance is kind of missing the point, right? The indices have kind of been walking hand in hand, and we're starting to see them diverge based on healthcare and financials relative strength, and then tech relative weakness as the AI trade slows down. And again, it's not dead and gone in the AI trade. It's more of just a slowdown and a reset, it seems. Let's take a look at the intraday anchored VWAPs here in the cluster. So instead of being above the entirety of the stack, you're just in the cluster where there's really not a lot of clarity. So be my guest if you want to get chopped around in here. Certainly doesn't float my boat. I'm going to pass on that from the NASDAQ. Let's take a look from high to low with the fib. You're under the fib 61.8 as opposed to being above like we are in the S&P 500. Let's come in maybe from the low as well on the NASDAQ in particular up to this high. Fib 38.2 is here, reinforcing that 616 top of the gap. If generally this area can hold, I would not throw the towel in and just like roll over and say, oh, that's it. Market's going to go to zero and just it's the end of the world. Just no. Relax, 616, look below and fail, holds in there, still looks okay, trying to maintain a little bit more of that, dare I say, trying to pass a little bit of that resiliency to the NASDAQ from the S&P. So that is the levels. Those are, I should say, the levels. Let's use some proper grammar. Let's take a look at the NASDAQ internals. Much more flat, right? Instead of getting volume inflows, flat, cumulative builds flat. Monday looked okay, Monday looked okay, but really Tuesday, Wednesday, flat. So, and what's the other takeaway? Remember that this measures from previous day's close. This measures tick by tick. So it's not a shocker compared to Friday's close down here that, of course, on the Monday gap up, your volume flows are going to be substantial, over 400 million. Of course, your advanced decline line is going to get close to trend higher zone. That's like a no-brainer because of the size and the magnitude of the gap. But following up, incredibly neutral, and that's what I would key into on the NASDAQ side. Let's take a look at the market profile. We can see a liquidation break off the open via the A period single prints, just trying to get a little bit more data on the screen there. Value is unchanged, right? See how we have this, and this. Value's unchanged to, dare I even say, slightly lower over the span of the week, which is completely opposite to that of the ES. So once again, if you're looking for shorts, look no further than the NASDAQ. If you're looking for longs, although they're difficult and choppy longs to pull off, probably look over at the ES futures. Really, if you're looking for longs, the answer is go on over here to the diamonds and take a peek at this daily chart. I mean, my goodness, take a look at that. Beautiful hammer right over the bearish engulfer high from back over here. Great reclaim of the daily 20 SMA. Breakout to new all-time highs today. Old man Dow looking good here on the bull flag break. Now, we can see it looks good now. Does that mean just chase it long after it's made this really beautiful advance over the last 4 trading days? Probably not, right? It would be reasonable for something like this to maybe start to step up, maybe a deeper pullback to a level, if I had to eyeball it, somewhere in here, right? That wouldn't be so bad. but it's trading much, much more cleanly than the S&P 500. So the diamonds, certainly something to keep on your watch list. Let's take a look over at the IWM small caps, starting on the daily time scale. You can see here, we're just sort of contained still in the balance range. So really no commentary on smalls. It does look a little bit like a failure in that upper wick over the daily 20, closing weak on the lows. Just kind of pinching in between the moving averages. If you do break down through the bottom end of the range, the bearish pressure is on. I think the chart speaks for itself. You have this rolling top, and then, of course, I don't want to say game over, but with some of the things we'll talk about from a fundamental perspective, inflation, the Fed, XYZ, it's getting a little bit harder to believe in the prospect of further cuts into the end of 2026. So here's the hourly chart. I didn't reset the anchored view apps, but I think it just reinforces the point. Be my guest to get chopped up in here. I'd let it be. Either you high or low over the gap fill reversal, rotate back to the midpoint of the range, and then seek the top end of the balance, right? You always target the opposing end of balance inside of a balance range framework, or you break the lows and go. It's really that simple. So watching these lows very closely into the end of the week, if you're just doing this, then there's no takeaway. I wouldn't use this as a data point for the market itself. Let's jump into the Russell market internal, see if there's any divergence as the market goes sideways. Survey says no. Did my homework a little bit on this one already. So neutral volume flows, not much to read into there. Technically over the zero line on the advanced decline mark, and the index cumulative build really isn't all that bad. One neutral, one bearish, decent Monday. That's really it. So balanced until proven otherwise on the Russell. I don't think it's worth spending too much mental energy trying to parse out what exactly it's trying to do. It's just balanced until proven otherwise. Notice that even with today's upper wick, so to speak, on that A and B period there, which we would just see as the hourly upper wicks, right? You're really just balanced. Look at where value closed. Unchanged, unchanged, unchanged. Nothing to really write home about on the smalls. So with that, let's jump back over to the platform. Let's rip through the remainder of tonight's analysis, and we'll keep things moving forward here. So spiders, let's evaluate what's happening with the sectors. As mentioned already, there is a decent rotation taking place, and because of this rotation, it becomes very difficult for me to take an overly bearish stance on the S&P 500. Remember, a rotating market is not a crashing market. You need everything selling off at once if you're going to experience that nasty 10% drawdown, 20% drawdown, oh my goodness, dare we even say a 30% drawdown, right? Everything needs to be selling at once. The classic saying, right? Markets don't crash from the highs, markets crash from the lows. We're over the daily 20 SMA. Give me a break if you're talking about Armageddon. So in terms of leading the pack, we have healthcare here up 4.82% on the week, followed by materials. Materials is the lightest weight sector, so I'm not reading into that too much, but financials are the second heaviest weight sector, and they're up 1.4%, outperforming the S&P 500, which is only up 90 basis points. At the bottom end of the barrel, it's semiconductors, it's discretionary utilities, and even tech is underperforming, only up 21 basis points versus the index at 91. If we take a look at the actual structural charts, tell me we're in a bear market with XLV looking like this. Those two things don't belong in the same sentence. Huge monster breakout this week on healthcare, driven by Eli Lilly. Really, Pfizer's making a move. You have AbbVie making a move. You have a lot of these names making a move. ISRG has made a beautiful move. So this XLV chart is a monster, and it's going to offer plenty of room for pullback higher lows to continue the trend and the breakout. If it just continues to rip in the upward direction, this has a ways to go until the all-time high. This was a massive laggard earlier on in the year. It took forever to break out of the April tariff situation lows, and it's finally doing that, and it's releasing all of this, energy, so to speak, which is going to keep your S&P 500 afloat. There's really not much of a reason to be an aggressive bear with a chart that looks something like this. And you could even take it one step further and go to the XBI, which is biotechs, and you have to remember that biotechs as a sort of a, on the spectrum of risk on, risk off, certainly falls more on risk on. This is like huge R&D spend for who knows what the payoff might be. You don't invest gazillions of dollars in biotech thinking, okay, maybe we're going to make a miracle drug in a recession and let's just burn a bunch of cash trying to figure it out. No way. So this looks pretty darn good in terms of XBI as a risk-on indication as a pair with the XLV. If we look at XLB, I'm quite impressed with the fact that it did not go lower high underneath the overhead supply. Not the most compelling daily bar, but if it does look like that, I'd put it back on the cautionary watch list. You could certainly see trend line here is still intact underneath the daily 50, but reclaiming this zone at 87.75 is at least a step in the right direction. If we look at financials, this is the next spot that is shining like a diamond in the rough. Double bottom could be the call here. I just like the fact that we're back in this range, and we haven't really hesitated to rotate to the top end versus, an alternative could have just been like this, and then a drift back down into this range, much more bearish for the broad market overall, and that's just certainly not happening. Now, it's important to parse out here that the banks are the large institutions that are driving this XLF higher, not so much Visa and MasterCard, which, as we know, are massive laggards in the sector. So there's Visa, here's MasterCard, here's JP Morgan, for example, nice break to new all-time highs. Here's Goldman Sachs. They had a headline this morning that they've collected the biggest fee in the history of the firm for an M&A deal. Again, these are just not headlines you're going to read in a recession right now. So Goldman Sachs, JP Morgan, these things will be top ideas as we move into the remainder of this week, as they start breaking out of really long, multi-week, multi-month, almost multi-month bases here out of their weekly bull flags ultimately. So that's interesting to me. XLF looks bullish for the S&P as a whole. Let's go XLP. This is what the XLB could have looked like as a threat, and this downside is something to pay attention to on the XLP. If this starts to come in a little bit, maybe dial back expectations. There's one chart in particular, TJX, which looks pretty good for those department stores / retail spend. Earnings next week, but look at this thing breaking out. If the XLP really struggles more meaningfully underneath the overhead supply we were just exploring here, then maybe not as thrilled about that TJ's breaking out. So that's something to watch there. Let's keep taking a look through the sectors / TLT is not a sector, but bonds. We'll have a deeper conversation about that when we're talking about fundamental data in just a moment. XLC still an issue. Highs, lower highs, lower highs. I don't like this chart at all. Yes, weekly bull flag, that's fine, but from the day-to-day perspective, really rough downtrend here, lower low. This is easily a lower high opportunity. Consolidation keeps the pressure on. Bearish Brigade bolts, again, will likely push this lower. We can thank Meta for this, and we can thank Google, which kind of had a failure near its high on today's session. So concerns on the XLC, definitely still there. Energy sector, possible higher low here. Something that looks like that is on the table as a possibility. Lightweight sector, not going to be an over... we're not going to spend too much time on that. Same thing here in the XLRE. Midpoint of the range, not worth spending too much time on. Industrials, top end of the range, not worth spending too much time on. If it goes like that, upside pressure. This is more like 8% of the S&P 500 versus your XLRE, which I believe is like less than 2% or less than 3%. Let's go SPY. Here it is. Real estate, 1.88, less than 2%. There you go. Versus those industrials, about 8% still of the S&P 500. So this would be more meaningful. And I think CAT right now is actually set up quite nicely. A lot of folks talking about CAT. A break of this, a break over these highs, right? These two tight hammer highs possibly get some gear. I don't like the upper wick on it, but CAT, kind of interesting. Let's go back to XLK through the sectors. We have a multi-day range here, very similar to the QQQ, not really a shock there. Over the bearish engulfer high, though, is the key part of the XLK. As long as we're over 291.50, looks good, trying to make this rotation to close the gap overhead and retest highs. If it fails and does something that looks like this, much larger concerns that we would, of course, have to navigate in real time, and we're going to start talking about, right, head and shoulders and the possibility of when and if, remember, it's not a head and shoulders until it is, when and if we drop the neckline, the gates of hell may open up for the market. We shall see into the end of the year. Wouldn't that be something? Christmas rally just totally gets rug pulled. Don't do it to us. Let's see. SMH, nice hold here over the previous all-time high bearish engulfer as well. That's going to be at 346.75 as long as you're above that. No concerns yet. Again, choppy, sloppy, absolutely. But general market structure still technically trending higher with, you could count lows, higher lows, higher lows, higher lows, higher lows, higher lows. Certainly possibility for a higher low here. Let's keep rocking with the XLY. Tesla and Amazon continue to be the drag on this. No real indication of this taking place until Tesla, I would think, really gets in gear, which it's not. So patience on discretionary here. Let's go XLU. Utes, multiple inside bars, so Tuesday and Wednesday today inside of the Monday range. Probably worth keeping an eye on utilities here. If you want some Utes names, you could just go XLU and take a peek. I think Next Era Energy, NEE, is a good one there. Very liquid and trades well enough where you could keep an eye on it. So inside bars, I'm not overly interested in taking the break to the upside. You do sort of have the retest of the head and shoulders neckline taking place. If you break the trend line, maybe it's lower to the equal lows. I would just kind of keep an eye on it. For the S&P as a whole, it's a lightweight sector. It's not going to move the needle all that much. Let's take a look through the actual ratio grid, see where our relative strength, relative weakness is. If you're not familiar with how to set up ratios in Thinkorswim, check out the video tutorial in the top right-hand corner. This is the glue that holds the market together. We know that. I would prefer that this started to trend a little bit more cleanly in the upward direction over the 50 SMA. I'll give this a neutral for now. Concerns in communications, concerns in discretionary. XLV looks great in terms of its recovery effort there. I do not think that we have major concerns in staples being risk off, nor utilities looking risk off over here either. Let's jump into the B set, or A set first, sorry, and then we'll go to the B set. So this still looks okay. This is borderline, but okay for now. This a little bit more neutral underneath the 50 SMA. Looks okay over here. This isn't concern, and this is kind of neutral over here. So not batting 6 for 6 on the risk on look, but definitely still leaning more risk on as opposed to risk off. If we jump over to the B set, the gold rotation of the downside is bearish for the S&P. This staying elevated is bullish for the S&P. Bitcoin continues to be a laggard around that 100K mark. Just can't seem to get out of its own way. I would really like to see the Sailor Shift tool flip to green if we're going to start thinking about reclaim longs back over the bottom end of the balance range here for the Brigade bolt in the upward direction. Let's jump on into the dollar and rates. Really not much happening in the dollar today, just kind of sideways. And this is where we start to open up a can of worms with the entire debacle, so to speak, with the fundamental data. If we jump on over to the inverted ZT, what you'll notice is it continues to go sideways and even, I would argue, drift in the upward direction. You can see this more meaningfully over on the Fed Watch tool here, where the odds of a December rate cut have dropped, I wouldn't say precipitously, but meaningfully. I mean, we were at 85% odds before the Fed meeting. Then we went to like 79% odds, and then we sort of drifted to 65% odds. And today, after all of the nonsense was said and done, we'll get into this nonsense in just a second, the odds have dropped to 60.1%, almost a coin toss for the meeting in December. And like, what happened to the market where we were like, oh wow, okay, rates are going to drop and go to zero because Super Dove Mirren's in there and we're getting all this good data about inflation coming back down and tariffs are a one-time price shock and the labor market's doing fine, right? So, or the labor market needs saving rather. So where does the drama begin? Well, really, let's just take a look through all of these headlines today. It starts with the government shutdown ending. It continues with, this was Sunday news, right? The $2,000 dividend checks going out to Americans, inflationary. It comes alongside with Caroline Leavitt saying that the data is likely not ever going to be released for October. And what do we know about Jerome Powell? What is his favorite thing to say? Anybody? What is Jerome Powell's favorite thing to say? Oh, I don't know. We'll just wait until we get more data, right? We'll wait until we get more data. We'll wait and make a decision based on the totality of the data. We'll make a decision based on the incoming change of data, right? I think you could go out and find a gazillion instances of him saying that they're data dependent, right? So to not have the data ever be released, are you kidding me? Right? That's crazy. And then this one in here, the federal statistical system may have permanently been damaged. October jobs report likely never to be released. Are you kidding me? That means that the Fed is going to be flying blind. So yeah, you better believe that the Fed's going to want to pause and do nothing in December rather than just continue the rate cutting cycle because why not? And that's what the administration wants. Now, let's pair this with another interesting development today. Bostic, who had a speech at 12:15, announces that he's not going to look for a reappointment in February. Okay, so what do you think? What type of Fed participant do you think is going to be appointed to the board in February? Someone who leans more hawkish and wants rates to remain elevated, or somebody who leans more dovish? And what does that actually do for the entire situation of the Fed, the tension that's there, and the possibility of being at a gridlock and not getting this vote to move rates lower in, I mean, obviously February is not December, don't get me wrong, I get that. But in the future, right, what does that mean for rates? It's just total, it's kind of total madness right now with flying blind from a Fed perspective, and the market just can't really figure out what to do about all of this. So as we look forward to the economic data, this not going to happen, not going to happen, not going to happen, not going to happen. So really just don't even bother checking the economic calendar for the next little bit. 30-year bond auction tomorrow maybe. That's it. Maybe some more Fed speak. There's not really anything to talk about with this lack of data that's been coming out. Let's take a look at the earnings calendar. Circle got hammered on earnings this morning and just sold all day. OnCloud did gap up and staying elevated. That was the other one that caught my attention. Cisco, nice move higher in the after hours so far, trading around 79. Tomorrow morning, pay attention to Bitfarm and probably Disney as market movers, maybe JD as well. And then after the close, I'd say these two are going to have the most attention on them. Definitely Applied Materials for me in terms of that AI trade and continuing to monitor that. With that, though, let's take a peek back over at the platform. Let's finish up our extended look through the supporting evidence. We already looked at this ratio technically. Let's go to... there's nothing on the bond relationship that's new. I can save you the time there. Let's jump into credit spread. Still iffy on the short end, SHY, HYG. So the fact that this is moving higher, not really a huge red flag, maybe a tiny white flag as of right now, maybe something literally of that magnitude, not the end of the world. If we look over at the HYG, this is our holy grail, as we described in that Saturday update video. Sort of got a kick out of some of the comments over there that were like, what do you mean you just learned this? Well, if anybody's actually been watching the videos, you know we literally cover it every single time we check in. So what do we have? Look at the lower high. So lower high versus equal / slightly higher high, even in the S&P. Are we due for a little bit of a pullback? Is it finally time to cool this thing off a little bit after the gap and goes? It could be. It definitely could be. I'm carrying that forward as a meaningful data point. It's been pretty spot on over the last couple of weeks. Let's go on over to total breadth. No surprise over here to see some improvements with the rotation we've talked about in XLV and XLF. No problems over there. And we'll see this reflected in the RSP as well at the top end of the range here instead of just lagging and being towards the bottom end. You can see in the QQQE, it's actually a little bit weaker, noting that it did not get towards the top end of that equivalent level here. Let's get on over to the volatility side of the market. You can see that the VIX is lower in here. It's just kind of like unchanged rather. But take a look at the VVIX. I thought this was a little interesting today. It held a gap up. So a little concerned about that. Is this the start of something potential? That's a horrible circle. Is this the start of something potentially new? Maybe. This is not like alarm bells going off in their entirety, but it is like, hey, start to pay attention a little bit. If we go on over to the vol futures, for the life of me, I can't figure out why this white line is not over that gray line. If you take a look over at, let's just go here, let's go here, let's go VIX futures. Take a look at this, right? That should be, look at the distance here versus the distance here. You're definitely, your front month is in a deeper contango than your back, first back. So interested, any mathematicians can help me figure out why that's the case. It's currently plotting a 1.03. I don't know, let's just do some quick math. This tells us 1955, let's call it. This is 2088. Why is that not larger? Why is that not larger? Anyhow, contango across the board. Doesn't matter one way or another. Contango is there. You have contango here, and you are also getting very close to that normalization on the one-day VIX, which is great. I'd really say it's just the VVIX. Volatility of the volatility index is starting to creep slightly higher. Could be a precursor to hedges starting to go on the market as we approach all-time highs. Especially, let's think about this logically as well. It's a good segue. We could just jump over here. We could take a peek at NVIDIA. Earnings next week. Next Wednesday, NVIDIA earnings. There's some hedges going on ahead of NVIDIA earnings, possibly. If I'm looking at NVIDIA's daily chart, I do like the back-to-back hammers. This thing got obliterated on the 100% retracement. I like how tight this has gotten here over the daily 20. I think the two-day high break could set up the move to retest this neckline on the daily double top in here at 202.40. If we jump into the hourly chart, I don't love the structure here. You could kind of see I'm a little bit level happy with everything that's going on. I don't like to be level happy. I like to let my charts breathe a little bit, but I just don't really see it as being responsible to have anything other than this type of map here. Notice the low of Monday, high of Tuesday, intraday closing high today. You have this high to contend with, this coming from this breakdown area. It's just really, really tough to parse out what the right structure is to the upside. I'd think that the best idea would be something that looks like this, if asterisk, right? If we're going to have an initiative market, let's say that there's some catalyst overnight. NVIDIA today denied building a data center in Mexico. I thought that was funny. They released the headline, then they walk it back on the headline. I just don't even know what to say about this CapEx stuff anymore. Meta has clearly been punished for all the CapEx spending. And I think that NVIDIA, it started to go that way off the open, and then things kind of stabilized once they retracted. So watching that closely, we'll watch 195.75 Brigade Bolt to the upside. Let's move along to Microsoft. Let's take a peek at the daily. Really sloppy chart today. Breaking through multiple times this level here. Swept and then back to the upside. Just really tough at 506.50. Would have expected a cleaner lower high hold underneath if stronger sellers were really going to pressure this for the weekly double top right here, and then through the neckline. Sellers wanted to keep it underneath 506.50 if that was going to be the reality, but that's just not what we got. So it is going to make it a little bit harder on the long side now, because what do we do into the moving average cluster? You want to long into the moving average? Probably not. Maybe deeper pullback to support 506.50 more precisely this time. Maybe that's it. Maybe that's the move there, but very, very low expectations of Microsoft. The only thing that you might say here is that it's trying to stage a slightly higher low, and we're trying to get that trend reversal underway. I have low expectations of it though. Let's keep walking forward with Apple. This is much better. This is probably a top setup for me headed into Thursday. Look at the inside 3-bar play here. Hammer supporting this 273 prior range highs from in here. Over the 2-day high, looking for that into blue sky territories. Problem? Yes. Problem is that we don't have an initiative market right now. We do have a little bit of a flight to quality. I would say Apple is somewhat quality, although those little iPhone pouches that they talked about on Tuesday, what the heck's going on with that? Definitely not quality there. If Apple's going to go over the bullish 3-bar play, though, I'd want to keep an open mind. It's clearly displayed relative strength. If it can balance and stay over this 273, I like it. I like it consolidating here. I like this rotating up into the all-time high, and even through possibly the all-time high. So we'll see on Apple. We would want the broad market to be cooperating, probably the NASDAQ breaking out of its 3-day range if that's going to take place. Let's go to Amazon. Not really fond of this daily chart. Really sloppy on the daily. Had a tight inside candle starting to break down. That gives me a little bit of a, less inclination to trade the long side here. If this is going to start looking, whoa, that's a funky overshoot on the mouse. If that's going to start looking like double bottom, it's very clear where the recapture has to take place now. That's 250.35. If you can get that, then fine, but there's a long ways to go from here to there. And for now, I would just be very skeptical of new shorts in this area. Remember that primarily on the weekly chart, you're using this as a driver. We're looking at this prior pivot high back here to act as new support, right? If this is a V-shaped recovery, call it cup and handle, call it bull flag, whatever, weekly chart needs to support in this area over the top of the cup, over the top of the flag for that next staged higher low to continue higher. So keeping that as a top of mind priority if Amazon's going to play nice with this entire thesis that we've outlined so far. Let's go to Google. Great relative strength. Still kind of disappointed with its performance today. Tried a long off the top of this balance range. It didn't fail in a major way, but it wasn't enough to get paid on today's session at all. So balance range still technically closed above. Multi-day balance happening here now, trying to make an advance. Very equal highs at this, so it's very possible that we do have ultimately something that does this over time. Google does have that relative strength look. The trend is much cleaner, so I'll keep an open mind to it. But that deep pullback long, once again, it's supported near the right spot. It just didn't actually bounce in a firm way, trying to make the move higher. So open-minded, but low expectations of any types of breakouts in this market unless the NASDAQ is playing into that hand. Let's take a look at Meta and see what's going on with the Zuckerberg and his fantasy land. The chart's been getting destroyed. Lost the daily 200 SMA, and it's been straight downhill from there. So not thrilled about trying to do anything really on Meta. I've steered clear from this stock for a long while now, even as it was in this balance range up here. Tough chart to get involved in. As of right now, I just don't see it as, there's not a lot of clean structure here. Maybe a little bit of downside on the equal low break under 604. I don't love chasing it smack on the lows. You got a little bit of an H pattern happening here. If it's going to go double bottom and reverse the trend, fine, but it's got to get over the neckline. Really, the saying, nothing good happens underneath the 200-day. So I'd be inclined to just maintain a more bearish stance on Meta. I don't really think there's a reason to get long this name, even as a deep pullback buy. You just have too much overhead supply. I just don't like it. I don't like it. Zuckerberg, stop spending, cut it out with the CapEx, get this thing out of the hole, and then we'll start trading it, maybe for this gap close overhead on earnings, but boy, there's just so much damage that's been done to this chart. It's a tough one. It's a really tough one, and I don't love the structure that we're coming into down over here. I mean, these are April tariff lows that we're starting to work on, right? Let's keep moving with Tesla. Tesla looks okay. Tesla's still hanging out in this balance range. There's no reason to freak out, I don't think, yet on Tesla. I do think that now that we have the 50 SMA caught up here, a lot of people probably focused on that as a trailing stop from this breakout in here. If that gets lost, probably looking at deeper downside. Now, this is interesting, where it wouldn't necessarily be the worst thing in the world for, let's say all these buyers get stopped out here under the 50-day, and then we break the bottom end of the junk drawer, as we've dubbed it. That is trademarked officially now. We've got the junk drawer trademarked. It's registered. It's copywritten. The lawyers are all over it. If we break below, this thin structure pullback is absolutely on the table, and then this is just the next long, right? 365. How do we get Tesla either to, you need a huge catalyst, right? All-time highs, something that looks like this, break it out of the box, or you flush everybody out, reset, and then offer the long back in the upward direction off of this breakout point from back over here at 365. It's got to do one or the other. One or the other. Need a massive new catalyst, or drop it, bring in new money buyers, and see if 365 has what it takes to fuel it back to all-time highs. And if not, then like so be it. If there's no response down here and this just drifts off, drops to 200, then it's just out of play. And maybe the market is in store for a much deeper winter in terms of just consolidation and lack of follow-through or lack of things to do in the tech side of the market. I mean, I don't want to just start getting all philosophical and whatnot, but I mean, heck, the market from the April tariff lows in the NASDAQ is up. I mean, we're up 54.5% from the April lows. Are you kidding me? Like I don't want to say that's ridiculous and unheard of, because it's happening right here in front of our faces, but you're not going to just go 50% in a 6-month window for forever, or 7, however many month window we're in here for forever. There is going to be consolidation. There's going to be a pullback. I don't want to just start like arbitrarily shorting the market because I believe that, but if the leaders start proving that, if Tesla starts to come in, then like so be it. We'll have to change our tone at some point. Let's go to JP Morgan. Looks great, looks fantastic. So instead of tech, financials are the next spot to really focus on. JP Morgan, great. New break, the new all-time highs, new closing high. Finally closed over these wicks as well. Let's go on down to the hourly chart. Look at this beautiful high and tight bull flag. Any support over 319.55. Let's rock and roll in the upward direction. Even pullbacks to here. Overshoot. I'm getting too crazy with the mouse just because of how excited I am on these financials. 318 can stay above that. Looks pretty damn good on JP Morgan. The other one that we talked about earlier, right, was Goldman Sachs with the record-breaking M&A deal fee that they brought home. I mean, I'm sure those guys are rolling in the dough on it, but excuse me, boy, oh boy. Looks good, right? That looks great. I would say that this even has an opportunity to gap up tomorrow on the potential from the high and tight flag overnight. Foreign markets see it and buy it up. This looks decent. This looks really good for continuation. Goldman Sachs out of this multi-week range. It's just a matter of watching the all-time high, watching for continuation and breakouts to the blue skies. Let's keep going. Palantir, sore spot of the market, junk drawer, tried to break out. Earnings said no thank you, and we've been just stuck in this mindless, sucky action ever since, really. There's been a couple of okay trades on it. Long off the junk drawer low was one of them on Friday. But aside from that, not really clean. You could take it down to the hourly chart. You could take a peek over here. Pullback, right? Maybe that in there. That was another choppy one from Monday. And then Tuesday, horrible. Today's action, maybe a little bit short side through the gap close. Just tough on Palantir. Not so clean at the junk drawer high. And next steps for it are really, in my view, for me at least, I'm trying to be patient. Trying to be really patient on Palantir, not force the issue, not try to get overly aggressive and cute inside this balance range. Let it clarify, let it show me something clean, and then maybe we'll do something. But for now, no thank you. Pass. Let's go Broadcom. This is another one. Pass. It does have an inside bar today. It has been a massive, not a laggard in terms of its net performance, but in terms of the intraday action. Look at how many balanced inside overlapping days have been here over the last week and a half. Just horrible action. I would stay far away from this. It will clarify at some point. There will be a move that looks like this. There will be a move that looks like this. It will happen. It can't stay balanced forever. But until we actually get a break, until we get some severe volume flowing through this, just stay away from the entanglement at the daily 20 in my view. And this has been all this conversation, yes, it's helpful for actually trading the individual components themselves, but think about how this conversation we've had through all of these heavyweight components, it's not an accident that it's NVIDIA, Microsoft, Apple, Amazon. This is ordered in the weight for the S&P 500 to some degree. It's not perfect towards the bottom end by market cap, but think about the importance of these things for the NASDAQ in particular, right? NASDAQ has zero financials in there. So without the help of JP Morgan fueling it higher, the NASDAQ's going to struggle. These charts don't look fantastic. They're really slowing down and getting sloppy and choppy rather than trending cleanly. Let's go AMD. This one kind of had a little something to it this morning, post-Investor Day yesterday. I think the big deal here was a gap green over red. Gap fill reversal, off to the races. Just kind of hanging out near the highs. I think of all the semiconductors, this looks better than NVIDIA. This looks better than AVGO. It looks better than not MU. We'll take a look at MU. That's one of the trade ideas, by the way. Not ARM. ARM looks terrible. We'll take a look at that. It's one of the trade ideas as well. But AMD over this high could potentially be the semiconductor to watch if you're interested in the long side. Put NVIDIA on the back burner. Watch this AMD. Looks better, consolidating in this range. It's offering some relative strength already at its equal high versus NVIDIA, which is still off of its high by what? How many? That's off the high by 7% still on NVIDIA, which is like crazy to talk in terms of 7% moves when, S&P, the historic average, right, is 8%. It's usually never actually 8%, but, in aggregate, right? Let's keep going. I don't want to get too sidetracked and have too much fun on a Wednesday. Jeez, that would be a shame to have too much fun. What do we have on Robinhood? Terrible price action. I mean, just really, really rough in here. Daily 50 breaks the previous day low, rallies back into the previous day's range, closes in there. I think the next idea on Hood that I would like to see is let this be inverted head and shoulders. Let this take out the top end of the neckline and then look for a short here. Daily 20 rejection, same thing as what we had here on the Monday session, 137.10. Can we reject it? Can we roll over? Do we set a rejection of the overhead supply as a meaningful, call this hourly double top, whatever? Can we get involved here for risk reward? Trying to express that as a range basically for some downsides. So that is Robinhood. And now let's move into these 6 additional ideas. I gave away a couple of them. We'll start with MU. MU is a monster. This thing is a beast. It is one of the strongest names in the market just generally right now. Look at the inside candle near the highs after closing the gap. I think that this is just a watch over the inside bar high. If you get something that looks like that, if the Qs tomorrow break out of the 3-day balance range, I would look to MU as a possible long over 248. On the opposite end of the spectrum, I would say ARM is a possible short if the NASDAQ breaks down underneath the 3-day equal lows. Take a look at this, 147. Right? You drop 147, you're probably going to the origin of the breakout back here, thin structure retracement, that's 142.50. So you've got a long and a short, MU long, ARM short, depending on which way the market goes out of the 3-day balance range in the QQQ. Those are the 2 semis that I would keep an eye on. Next up is BMNR, which of course is our Tom Lee, not drummer boy, as his X handle states. Over the hammer high, could get interesting for upside. Possible. It's definitely possible. Is this a higher low? It is off the bottom end of the range. Right, that doesn't look all that bad. And if we go ETH A, or just ETH itself, this does not look compelling, but I think the point of the exercise is to say that it's holding the daily 200, right? So you still have lower high happening here. That's a threat. But if this can curl, right, if we can catch ourselves, then that will be bullish for BMNR, holds at the daily 200. So that's ETH A, just Ethereum futures. You could go ETH A if you want the ETF, similar. But let's go back. So BMNR, just to show it again, looks not bad here on that inside hammer over the hammer high. Could be interesting. Something that looks like this. Even if you just want to target a scalp, right? Something that looks like that into this 43.45. Not bad. Not a bad little trade for the end of the week to watch out for. Keep an eye on any overnight action in crypto. Certainly worth an eyeball there. So that's BMNR. Let's get back to dailies and let's keep moving forward. We have STX, Seagate. And this is going to be a nice possible short. Reason why is, yes, it is at the top of the move, but take a look at the nuance of these highs. You technically made a new high today and then failed all the way underneath previous bar low, made a new low, and closed weak on the previous bar low as well. So if you take out today's low underneath 279, you're probably talking about downside. You could start to target something like that. So let's drop this in with a horizontal level. You could probably target this previous pivot high here around this 263, let's call it 50. For the sake of round numbers, let's take a look in the hourly chart, and there you have it, right? There's your attempt higher, completely failed, made a new low, tried to rally, faded, and closed weak. Underneath this, you're talking about a rotation to this low and the previous pivot high we just saw on the daily. I think this is a very reasonable short. You probably have to use shares. There are no liquid puts over here on Seagate, unfortunately. Let's go this. Unless you want to be, what are you going to take? 2 out of 200 to remain a small fraction, 2% of the available move there. I mean, you certainly wouldn't start taking 100 contracts if the spread, number one, is over 50%. And number two, you're going to stick out like a sore thumb. So just be careful of that. Please go shares if you're going to try this Seagate. It is easy to borrow, both on Thinkorswim, and I did check on Interactive Brokers as well. No problem to borrow over there for locates. So that's STX, downside. Next up is MSTR. Strategy, no longer micro. This thing's on a cliff. It's on an absolute cliff. Under 221 is a weekly washout. Take a look at this thing on a weekly chart here. My goodness, are you kidding me? You got to be kidding, right? So under 221, 181 is in view, and there's really nothing stopping it from getting there. This is a massive, you could start saying weekly or even monthly double top under the neckline. Sayonara. We know Sailor's fallen out of, I think, favor with most people who were like all gung-ho about it in here, and that's, sign of the times whenever that happens. But for now, just a huge opportunity, I think, to get this little piece of the thin structure retracement. Let's throw on a volume profile because it's going to look, this is going to be one for the books. Yeah, you drop underneath this high volume node here, you're talking about right on the money. 181 is where that next high volume shelf starts to pick up. So that looks good on MSTR to me. Let's go back to MSTR. On the hourly chart, you've got this clean H pattern happening here. I wouldn't be short above 221. I would start looking for either consolidation build out, then you have a daily bear flag, and then it goes, right? Something that looks like this, lower high underneath. But that 221 cliff is worth paying attention to, in my view. MSTR. Last but not least, OKLO. It's my final idea for you, and it is a short as well. And we're thinking about a neckline retest here, being bearish, trying to seek lower into the breakout point down there at 84.60 over time. Notice, again, very similar, maybe not extremely similar, but STX, right? Same concept where if you take a look at the hourly chart, morning rally took out previous day high, even attempted this equal high, then what happened into the close? Things got a little bit weaker. So if we could break this and Brigade bolt underneath this low, underneath today's low at 106.65, probably thinking about 95.90, and then ultimately underneath that is where you start to open the door into that 84.60 origin of the breakout from way back over here. All right, that is OKLO in a nutshell as a possible short underneath the neckline of the Head and Shoulders. That's what I've got for you in today's episode and installation of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a very simple thumbs up. As always, we are live every single morning here on YouTube at 8 a.m. Eastern Time for the pre-market prep. Come on out to the show. It's completely free, open, wide open to the public. Join us in the penthouse office where we run through all of the futures, ES, NQ, Russell, and then the core list of companies and any other outlying ideas with all of the most relevant data based on the pre-market session headed into the 9:30 bell. With that said, have yourself a green and fantastic rest of the trading week. And as always, I will see you in the next one.